Right, we're now going to be touching base on one of the stocks that has been a buzzer. It has come up with a strong set of quarterly numbers as well, with revenues as well as profit after tax coming in above street estimates. It's also a stock where we've actually seen margin expansion, which is the stock I'm talking about. It is ITD Cementation, and the CFO, Mr. Prasad Patwardhan, now joining us live right here on the show. Good morning. Let's get straight down to it, and we'll begin with the fine print. It's a thumbs up from the street when it comes to the numbers as well. Now, if I look at the revenues, and I'm just seeing the numbers, they're up what? 33%. It's higher than the street estimates as well. You had a guidance of 20 to 25% going forward. Are you sticking to that guidance after going through the first quarter numbers? Are you being conservative?
Good morning, and thank you for having me on your show. We are not being conservative, I would say we are being realistic. Given the order that we have received in the last financial year, where the order inflow was about 7,500 crores. This first quarter, our order inflow has been about 6,000 crores. But some of these contracts, these are long gestation contracts, and it will take some time for the execution to pick up, especially on tunneling projects and the road project that we have recently won. The Ganga Expressway project, we expect the pace of execution to really pick up from probably Q4 onwards. So that is why we are keeping a guidance of about 25% for the current year. But hopefully we should be able to do better than that, provided all things go according to plan.
The other question I wanted to ask you was, and I said this in the introduction, the margin expansion. Now that's come in and it's back at double digits. However, in the earnings call, the management has talked about single-digit margins in percentage terms for the year. Why is that the case? What are you expecting to be different in the remaining 3 quarters?
We are not expecting anything different, but there were a couple of legacy projects where we have reported losses in the past, and those projects are likely to be completed in the current financial year. So there will be some impact of the legacy projects, because of which the margins have come in a bit lower than our expectations. But as those projects move out of our order book and we start executing the new projects that we have recently won, we are likely to see an uptick in our margins going forward. The second part is, the commodity prices. The commodity prices, while they have cooled off to some extent, there is some impact of the increase in the commodity prices that we are going to face in the current year. And the third aspect is the increase in the interest costs. The interest rates are on an upswing, and the infra business that we are in is to some extent capital intensive. So that is also going to have some impact on our performance in the current year. But given the order book that we have and the margins that we expect to make on these orders, gradually we are expecting an uptick in our margins, definitely by Q4 of this year, and that will get replicated in the FY24 results as well.
I'm going through your order book, and the order book currently is at about 20,000 crore.
That's correct.
What is the execution timeline? Because getting order is great, but execution timeline is important. And the order book which currently you have, if I may throw in one more part, how would you divide this into low margin order book, legacy order book, and new order book?
There are 2 aspects that you have picked up on. The current order book of 21,000 crores, we expect to execute that in about 3.5 years. The low margin orders are gradually moving out of our order book. We expect to see normalized margins on the orders that we have won in the last year and in the current year as well. So the low margins order, we had some elevated metro orders and a few other legacy orders where the margins were low and they were impacted by the heightened commodity prices. But we expect them to move out of our order book in this year. And that is why we are expecting an improvement in our margins from Q4 onwards and in the next year.
The thing that I wanted to discuss, in detail about Prasad, about the status of metro projects, especially when it comes to Bangalore and closer home for us, Mumbai.
Bangalore, the underground metro project is proceeding exceedingly well. We have started tunneling work over there sometime in June of 21. And that project is going very well. No issues over there. As far as the Mumbai Metro underground project is concerned, we have already completed the tunneling work, 5.5 kilometers, 2 tunnels. those are done. We are working on the station buildings and some other work that is remaining, and we expect that work to be completed probably in another 9 months or so.
You know, your debt levels also have increased, as I understand, from 409 crores to 515 crore rupees. Wanted to understand what's the debt repayment plan like?
Well, most of the debt that we have on our books is working capital debt. The term debt is, hardly about 70-80 crores on our balance sheet. And the debt levels have not really gone up. The gross debt levels remains at more or less the same level where it was in the previous quarter. It is only that, in the March quarter, we received a lot of payments from our customers. And that is why there was a high cash balance in our books as of March. And that cash has been deployed for execution of our projects. So while the gross debt number is more or less at the same level, it is the net debt number that has gone up, because the cash which we had on our balance sheet in March has been deployed. A large part of it is deployed in our project execution.
Right. Okay, Mr. Patwardhan, great to have you on the show and good luck for the future quarters. I'm sure we're going to again speak soon.
Thank you. Thank you so much.